Hello everyone, PS from PS Invest Plays here today. Gig economy is expected to grow 3 times faster than traditional workforce. And this was reflected in the gig economy stocks where they have tripled or more than tripled in 2020, but have seen a downward pressure in 2021. Is this trend going to continue? Or we can expect a higher price movement in 2021 and beyond. Today, we're going to look at two stocks in the gig economy space where we'll understand the business, their financials, review their chart using Elliot wave theory, and see how we can make money. So stick around. I think you'll like what I have in store for you today. All right, the first one that we're going to look at today is Fiverr, ticker FVRR. Fiverr is a leading freelance marketplace and is growing like a weed in a massive market. Although the stock appears expensive at a market cap of only $7 billion, Fiverr could grow into a much bigger company in the future. Since the economy was hit in 2020, Fiverr has proved to be invaluable for businesses and skilled freelancers. And the pandemic has been a tremendous tailwind for its business. This is because Fiverr is a two-sided marketplace that enables flexible and remote work, which has been in high demand since 2020. People who may have been laid off or are looking for extra income during uncertain times due to the pandemic have turned to freelance work, and many buyers turn into the platform to urgently accelerate digital transformation. This pandemic cohort has been strong on 3 dimensions for Fiverr. It is the biggest cohort in the company's history, with organic growth still the main channel of acquisition. The company's effort to move up the market has attracted bigger organizations with greater needs and spending capabilities. The pandemic cohort's retention is at least as good as old cohorts. This is important because it suggests that the pandemic boom should be sustainable. Today, Fiverr is a truly horizontal marketplace with over 500 different categories in 9 very large verticals. It is up from 200 categories when it IPO'd 2 years ago. One big opportunity is data-related services, which traditionally only large enterprises have access to. In addition, new services are being created constantly, for example, TikTok advertising and drone footage editing. The company is adding 30 new categories per quarter. Now, how many categories can Fiverr get into? Management believes Fiverr can have as many categories as Amazon, which has 30,000 categories. The company is aiming to build the world's largest queue of services, and it is just getting started. As a leading freelancing platform with 3.8 million active users or buyers and over 500 categories, Fiverr enjoys considerable advantages from scale and network effects. By providing a greater transparency and removing friction for its highly fragmented user base, the company is able to charge an attractive take rate of over 25%. Analysts have very optimistic projections on Fiverr as they expect the business to grow at 38% CAGR in upcoming 3-year period. Now, there are some future risks for Fiverr as well. One of the biggest worries is the sustainability of its growth. Some investors are worried about potentially difficult comps the company will, or competition the company will have to face this and next year. This fear is widespread across the market, and I believe it is overblown. The pandemic has largely accelerated existing trends, and normalizing does not mean trend reversal. In addition, the recent sell-off in COVID beneficiaries has de-risked much of this concern. Fiverr faces competition from a number of online and offline platforms, including traditional contingent workforce and staffing service providers, and other outsourcing providers and online freelance platforms such as Upwork. Buyers and freelancers may circumvent the Fiverr platform to avoid transaction fees and service fees. High volume buyers and freelancers are especially at risk of circumventing the platform, which is a risk to the company's strategy to move up the market. The company is headquartered in Israel and may face geopolitical risk many investors are not accustomed to. The revenue, gross profit, EBITDA, net income are looking extremely well. I think Fiverr is a very unique company with a leading position in a massive market. Valuation may look high, but the company enjoys attractive unit economics and free cash flow is inflecting, offering an attractive free cash flow yield. Although the stock is volatile and the business is risky, Fiverr is positioned to be a much bigger company in the future. This is also indicative in the technical review where I see excellent gains long term. Looking at the chart for Fiverr, the bull run that started in 2020 has completed its first leg up, which meant the first 5 impulse waves, or rather 3 impulse waves and 2 corrective waves, are over. The good news is that the second wave of this bull run is also over, which got over at 76% correction of wave 1. It seems the sky is clearing out for Fiverr, and now Fiverr is in wave 3, which can be a 161%, 200%, 261%, or even 323% of wave 1 and 2 combined. What that means in price target is, on the minimum side, I expect Fiverr stock to reach $671 in the long term, the time horizon being 5 to 6 years. With the current price of $230, that means almost a 200% upside potential long term. If you like this video, don't forget to subscribe, hit the like button, and share this video with your friends and family. Let's look at our second stock in the gig economy space, Upwork, ticker UPWK. Upwork is in the same space as Fiverr, except Upwork is headquartered in USA. It operates an online marketplace that enables businesses to find and work with highly skilled independent professionals. Its product offerings include Upwork Basic, Upwork Plus, Upwork Business, Upwork Enterprise, and Payroll. Also, Upwork is the largest freelance marketplace provider in the world. The gig economy is one of the fastest growing industries in the world. People prefer to work as a freelance as it allows them to be able to manage their time freely. Analysts expect the gig economy to have a CAGR of approximately 21% for the upcoming decade. About 72.5% of visitors enter the Upwork website directly without searches, which means that the company has already established a well-known brand and a loyal user base. Another factor which proves high loyalty of users is the client retention rate of 106%. Analysts have very optimistic projections on Upwork, as they expect the business to grow at 24.5% CAGR in upcoming 3-year period. Revenue, gross profit, EBITDA, net income are looking extremely well. And similar to Fiverr, the Upwork stock is volatile and the business is risky. But Upwork is positioned to be a much bigger company in the future. Again, this is also indicative in the technical review where I see excellent gains long term. The chart for Upwork looks very similar to Fiverr. The bull run that started in 2020 it seems that the first and second waves for Upwork are completed. Second wave was a 76% correction of wave 1, and now Upwork seems to be in wave 3, where on the minimum side I expect the price to reach $129 for Upwork, which translates into 145% upside in the long term. When I say long term, 5 to 6 years for Upwork. Now let's summarize. So Fiverr, I would recommend buying the dip. Any dip below $220 is a buy zone. Long term, 5 to 6 years, expected 200% upside potential on the minimum. For Upwork, the story is very similar. Buy any dip below $49, it's a buy zone. And long term, 5 to 6 years, expect on the minimum side 145% upside potential. What do you think of this analysis? Leave a comment and let me know. As always, don't forget to subscribe, hit the like button, and share this video with your friends and family. Until then, bye-bye.